Good afternoon, Sam. Lovely to see you today.
You too.
So I'd like to introduce you to Samantha Kmieciak. Sam is a independent financial advisor. We've known each other for, oh gosh, 5 or 6 years, maybe?
Something like that. Yeah, it's a long time.
And Sam deals with all sorts of things, including pensions, equity release, savings and investments, and protection, amongst lots of other things. Sam, there aren't that many women financial advisors, are there? Why is that, do you think?
I think it's just predominantly seen as a male dominated. Anything to do with finance is male dominated, and it is getting more and more to appeal to women because you can do it around childcare, and you can obviously you have more empathy with your clients than some. Obviously, some men are very empathetic, but as a rule, women are more empathetic. So there are a lot of companies out there that are trying to recruit more women and show that it's not male dominated, and we actually can do it very well.
And do you think, I mean, as a rule, it's kind of known that men probably save and do pensions more so than women in the past, although I think, times are changing, but has that changed significantly in the recent years?
Not really, no. Yeah, you're right. It is mainly men that approach me for financial advice, and then they have the wife come out and sit in, and then usually the men are traditionally in higher paying jobs. I don't think that's really changed as much as it should have, and they tend to be the ones that save towards retirement, and women obviously they join workplace pension schemes, but it's not with running a household, I suppose it's not really the prime focus of their attentions, whereas men obviously traditionally are the ones that start thinking about long-term finance.
Yeah, I remember when I first joined my first business, or my first company, they asked me to join the company pension scheme, and I thought, I'm 18, I'm not gonna, why do that? And I was there nearly 20 years, and it's like, oh my God, I should have done that before. But I think more so women need to look at their financial situation, because we live longer than men, mostly.
Yes, we do.
I wonder why that is. I don't know. So in terms of things like equity release, what does that mean? Is that something to do with your house?
Yes, yeah, you may have seen the adverts on TV, daytime TV, they're particularly predominant, but yeah, it's you build up your own asset over your biggest asset really over your lifetime. You pay off your mortgage, you've got a house, and it's just sitting there waiting for you to give it to the next generation, which is what most people think of doing. But actually it's a lot of money that's just sitting there that you could release, and it could actually have a more comfortable retirement, because a lot of people don't have enough pension provision these days. So it's one way of having a comfortable retirement.
So how would you do that then? Say your house, for example, is worth, I don't know, £200,000, just pulling it out of the air, and you've paid off your mortgage. What would be the steps, and why would you do that?
You have to be over 55, but the older you are, the better. And you can borrow traditionally about 50 to 60% of the house's value. And what happens is you have two ways of paying it off. You can either have gross roll up, so the interest is actually paid on your death, or you can pay the interest and then obviously give a larger inheritance to your family. Why would you do that? Many reasons. I had one person that wanted a heart operation, and he needed to do it because the NHS were refusing to do it. Other people, they don't have enough pensions to keep them through retirement, and they need to have some money to enable to live on themselves, to live on, because obviously the state pension is very, very small. Or many other reasons as well. I don't think the adverts you get on TV where they're all going on holiday and going on cruises is a particularly good reason. But you could do that if you really wanted to. But yeah, generally it's to pay a large bill, or help. You could even be helping your children, grandchildren during your lifetime, rather than having to wait for your death.
Yeah.
So being a grandchild or child on the housing market.
Okay, all right. And the other thing is about protection. Is that protection if you're a business and you can't work for through illness, or what types of protection can you offer and would recommend, I guess?
Everyone knows about life policy. So if you die, it pays out. Generally, people get sold it when they have their mortgage, and that's the only type of life policy most people have. Possibly we'll have critical illness on top of that as well. So critical illness, if you have a critical illness such as cancer, stroke, heart attack, anything like that, but you survive, then it pays out and pays off your mortgage. But there's many types of protection out there. You can protect your business if there's one or more directors and one of them wants to retire, the company hasn't got enough money to buy them out. You could have actually had a life policy in place to buy the director out, or any other policy really. So a key person policy. You can also have a policy that pays out a proportion of your earnings for as long as you're not able to work. So there's lots of different things out there that people just don't consider. People just think of protecting your mortgage and possibly critical illness. But the trouble with critical illness is once you claim, that's it. You can't claim again.
Can't claim again, no.
The policy ends. Whereas if you have something like permanent health insurance, that's my preference anyway, it pays out. Say if you're in your 30s and you have an accident, you're in a wheelchair or something, you can't work again for the rest of your working life, then it pays out for that.
So how did you get into becoming a financial advisor? Because you had a career in the Navy before that, didn't you?
I did. Yeah, after 2 years in the Navy, I had a talk with my boss, who's the kind of guy that didn't really like anybody. And he said, I'm not going to recommend you to become an officer. And that's what I really wanted to do. I wanted to become an officer. And I didn't particularly enjoy my day-to-day job. So I thought, 2 years in, your minimum is 4, but I'm going to leave the Navy. I've had enough. It's not what I thought it was going to be. I've got no opportunity to progress the way that I want to progress. So I'll go and do something different. And my dad had been in financial advice since the 90s. So he worked for the old Equitable Life, Prudential, the life not yet known. And he said, you'd be a perfect financial advisor. So I thought, maybe, okay. I'm not comfortable what I thought was selling, which my role is not selling, but maybe a paraplanner, which is like a paralegal. It's an assistant to an advisor. So I just decided to start doing the qualifications while I was in the Navy. Once I'd given my year's notice, they gave me time off to study and do the exams. So they're very supportive. And I left in 2008. So that was a great year to leave. But I managed to get a job as a trainee paraplanner in 2009 in Northamptonshire and decided that after a year I want to be a financial advisor, and became one. So yeah, that's my background.
Yeah, that's brilliant. And I think, you know, as I said, I've known you for quite a few years now, and your advice is sound. You know, as you say, it's not selling, it's looking at individuals and, you know, how they can best invest for going forward for their personal situations, you know, isn't it? Rather than you need to tick this box and have this and this, you know, everybody's individual.
Absolutely, you know, everybody's circumstances change as well, because what's true one year might not be the next. I've had a few clients that have become divorced, or their husband has died, or various other things that happen, which means that the advice I gave a year ago or whenever before this event happened is no longer the advice that I would give now. So the ongoing relationship with a financial advisor is very, very important.
Yeah, absolutely. It's not somebody that you just see once a year and you never speak to. You know, you've got to keep in regular contact, haven't you? So talking of that, where, you know, how is the best way to get in contact with you?
I'm on LinkedIn. I'm also on the FCA register as well. And the website is Essendon Financial Planning, which is the company that I work for. So you can get my contact details on any of those things. I'm happy to have a chat with anyone, no obligation, just chat about whatever they want to talk about. I love chatting. So.
That's brilliant. Thank you very much, Sam. Lovely to talk to you today.
Thank you. Bye.